It's the Crypto Sniper. Welcome. We're going to talk about Bitcoin and what it's about to do next. That's right. Bitcoin. Yes. Okay, let's go straight to the charts and get straight on with it. So here we are on the daily time frame. Now, a key point I want to make, and take all the lines away. Key point I want to make is that fundamentally, at a larger time frames, I'm feeling reasonably bullish. One of the key reasons is we ran a very important level on the downside some time ago, around about June last year, when we were in the FUD and all things fall apart, 3 arrows capital, etc., scene. I'm going to take it off log scale for a minute and bring you to this point. What I want to illustrate is that the 25,000 is such a key critical level. It is a key level of great significance for this chart. So how does it look? So we've got a key 25,000 level over here. And on the way down, during the bear market, you actually had to wind up for a bit to find the gumption to properly smash through with momentum. Key levels of significance are either just run and resisted in and pull back, or supported on and bounce, depending if you're coming from above or below, or they smashed with real momentum, and usually you have to spiral up, get some real kinetic energy to smash through. So there's a wall of straw on this order bomb, and you've got to come in the fast lane and you just got to smash right through it. And that's essentially what happened with this big sell-off there, and then this continuation structure with this pre-exhausting of bulls smashing it down. And that's absolutely killed it through that point at almost peak momentum. So it's often the point of greatest speed as you cross the key level of significance, and you also got knock-on momentum that carried you quite some distance further. Then what happened? We had a rising wedge. So such is the validation of the key level of significance. You've sold off so much from up top here. There's also further downside before that. You've sold off so much, and this was really intense selling, and more really intense selling. I mean, these were two hectic. I mean, the FTX sell-off period over here is almost small by comparison. That you actually get some form of a dead count bounce that got a lot of people shouting at us, "Ah, you're wrong." And we said, don't trust this, marginally higher highs, all these selling wicks, selling wicks. You're going to get resisted and knocked back. We drew the rising wedge. We said you're going to fall back, and that's what happened. Fall back, bounce, flat, and then FTX narrative into new lows, giving you about just under 15.5 at the absolute low down there. $15,500 for Bitcoin. So why is all of this bullish? Why are we revisiting this redux of the bear market? It's all pain and loathing. Well, the interesting part about all that is that the 25K, it's makes everybody aware of the 25K as being super significant. Quick word, look into the eyes, fantasize, see the hands. 25K, commodities and futures exchange. They have futures and derivatives, and key round numbers will almost always be pegging levels in terms of calls, puts, strikes, etc., in terms of the derivative game. So what you have to bear in mind is that these are very significant, because players that are in the market that shorted a 25K strike or longed a 25K strike are going either just out of the money and starting to lose, or just going into the money from a losing position. So these are very important points. So you get unique price behavior that is specific to what is known as key levels of significance in HVF method nonchalance, and is also known as pegging in terms of the affected causes on derivatives. So here we have that interaction. What happens subsequently? Down, ahead, and now you're heading back up. And what are we seeing again? Well, you started to see a little bit of wicking, a little bit of wicks coming up, wacky wicks as we used to call them. You used to be able to buy those chappies and wacky wicks for a couple. You used to get 4 for a cent in South Africa. How about you? How many did you used to get? There was stuff you used to buy for sub a cent. That's right. Can you believe it? Anyway, that turned into a localized high point. That's actually a mini head and shoulder that we warned about. You got a break to the downside. There was also a broadening structure on a bull pole like that. We teach you all about that in HVF method courses. You can go, in fact, have a chat with a trader and investing friend. Entirely free chat. And all you have to do, click the first link below the video and have a chat about your trading and investing with one of our experienced traders. Anyway, before I get sucked into other things, we've got a partial pullback. Thankfully, we didn't come all the way back here and make another shoulder. That would have been deadly, because you would have had another head and shoulder. So this was bullish that we supported here, and we came back up. However, we've got to bear in mind that we're now at that 25k. Look at that rejection candle, this rejection candle right here in the red with that huge long wick. Then we came again, the wick is rejected. Low vol, rejected again. Now we're again playing with the 25k level. Now, a number of things can happen, and we're going to drop the time frame where it actually looks more bullish. But I needed to warn you of this overall structure, because if we even go for a small little walkabout above the 25k and later gets smacked back, that is not necessarily a bad thing. Why? Because we want a right shoulder. There is no pattern without a right shoulder. Check those moves. Woohoo! See me on the dance floor with a couple of tequilas. I tell you what, that'll be something worth watching. Anyway, so left shoulder, head. And that right shoulder, ideally we actually want a potential pattern that will give us an inverted head and shoulder with a projection to the upside that will take you through, wait for it, 40k. That's right, you heard me say that, 40k. You're at 1.5 10 thousandths, and now you could be at 4 10 thousandths. Wouldn't that be nice? Many people in crypto would love that. That would bring them back into the game, How does that come about? Well, you would get this inverted head and shoulders. I'm going to go back to the log scale, and I'll say goodbye to that absolute Picasso of masterful work, and take the eye off and just show you how that comes around. So here you go, left shoulder, then you would have this kind of double head. It's like two uneven butt cheeks. It's quite unusual, I would say, but that's your left, and then this would potentially at some point later be your right. So we're going to have a look at that in a moment, but also we have to bear in mind the fact that it's in a structure somewhat like this. And this is what happens. It's a key point, this. Listen, look into the eyes, fantasize. What tends to happen is people are buying up the lows and they don't get filled. So you get the guys that buy at market. They chase in normally on new highs. This is the noob 101 era. They buy in there and they get a small amount of money in their current account or their trading account, and then they get smashed. And so they're buying recent highs and they're chasing in because they wait and see, oh, it's looking good, maybe I should go, as it's taking out the high. By the time they get organized, they're buying the highs. Then you get the folks that understand they should use limit orders, and they put a limit order and they don't get filled, and they have the little tag on their broker platform that they can just drag up and come under the lows all the time. And what we're actually seeing is you've had some low buying over here. So let's mark it up. In fact, I'm going to drop a time frame to illustrate this a bit better. We're going from the daily and we're going to drop down into first the 4 hourly. Let's do the 4 hourly. So now we're looking at this zone. What they do is they come in at nice low volatility. There was no more aggression to the downside. They buy in. Then the market runs away from them, gets to the 25k, gets a proper smackdown, but just a single candle. It's just resisting the 25k. It's not trying to knock you down to 0 or 10,000. It's a electric fence, back off. You're not running to the other border now that you've just been sparked. So then the buyers come in and they try coming over here. The market runs away from them. It comes off down. They're coming in under this. Now this little structure on its own is kind of tempting, but you'll look at it in a moment. But you've got to bear in mind, it is only marginally higher than these previous highs, and it's come from a lot higher up. So that is your up move, while previously this was your up move. You can see the difference. So from a much higher plane, you stalled only a little bit higher up. You only made that much extra juice to that high. But you started from a place that was significantly higher. So this is actually, as bullish as we are getting, it is classic rising wedge early doors formation structure, which is why, as you see, I have scenario cast for many different possibilities. We only guesses on a probability based and possibility based basis of what might happen in the future in terms of patterns and how markets go up. But the one thing we've learned is that retail crypto kids create rising wedges, because they drive up and they grind up under a market that is going up, grind up buying. So that would be the last rising wedge that occurred. Grind up buying, grind up buying, grind up buying, and then it surrenders for a pullback. And that's when they all forlorn, or they get washed out. If they're oversized, they get liquidated, and it's a tragedy and it's unnecessary. You then had this slightly more even butt cheeks over there for a double bottom that made that, and it's an absolute blow off. And what does it do? Electric fence at the 25k, bzzz, back down. So now you have a smaller version essentially going on here. Now we could pop out and even have a little trot and maybe make that one. We gave you two targets, 26,185 and a 26.5 that came from the structures. You could make one of those. You could make the 26,185 out of this. So it could break out to the top, but strongly ascending patterns. So now we're going to drop a little bit more just to go into this fine fella over here, which I think we need the 30-minute on. So strongly ascending patterns like this. And you can see it's all about the 25k here. Remember, we talk about key levels, always just run. So you smash, you get sucked to the level because there's a dearth of bids. There's no one bids at 24,997 and 24,998. Nobody sits and types that. There's nothing, and then there's 25k. So when the market is seeking supply, it has to run into the round number. And because lots of people see that sudden running because of the void, and we teach you about vacuums and voids, particularly in volume by price. But before a key level of significance, you normally have an even distribution, but as you get to key levels, it sucks all the localized normal bid structure into the round number. Because if you want out approximately around 25,000, you type 25,000. You don't type 25,001 or 25,003 or 24,998. You type 25,000. That's what happens. That's what human nature does. And of course, the markets then have a dearth of orders before and just after, because everyone's clustered on there. So instead of that normal even distribution that tends to have slightly bigger clusterings around the round numbers, you have a vacuum. So you get sucked fast into the 25,000. And because of that, you smash through it. That is why a key level of significance is just run. Because as people see that momentum, they chase in at market orders. So more orders chase the momentum that pushes you through the over available supply at 25,000. And then there's the normal weight of offer stack, and you have that pullback. So that's what you got there, pullback again. So you've had it there, you had it on that candle wick, you had it there, you had it on that one over there, you had it on that little shooting star there, then on that one, then on that one, then on that one. 4 in there alone, 2 in there, 1, 1, 2, and 4. I think I've made my point. There's 8 incidences in a very short time frame. This only started at about 6 on what day? The 16th. Today we are the 20th. The 21st starts here, so we're at around 6, 9 o'clock, 10 o'clock rock, who knows, on the 20th. So there you go. So that is a little bit of an insight on this. Now this can break up. It is an ascending structure, which is why we've got that line. That means that the people are popping in under here a little too much, but it can still be. I look at this and it's attractive. But when I go back out to the bigger time frames, another key value why you must have multiple time frames of reference. It actually calms you down when you're getting too bullish and too, gambler on, let's load up, this thing is only way is up right now. Now, overall, we're bullish medium term, and we could even be bullish short term. In other words, this structure can be a breakout where you leave the 25k and you make that 26,180. You might even have a shooting star pumperment or make the 26.5. I don't think so much, but I think we are on the higher side. The fact that we made this only marginally higher high shows that there's a lot of respect for the 25k, and despite having a much higher low on that pullback, we could only go so much further. So we couldn't dominate the 25k. It is that significant of a level. Back to that 4-hour time frame and even the daily time frame. So you can see this move up, very respectful to the 25k. So my personal assessment is there's also a possibility you go a little bit and then you come down and we end up in the rising wedge. Another key thing that happens regularly with head and shoulders that we've noticed, and this is again a probability, not a guarantee, but you often get similar structure by shoulders. We often get an upside HVF on a head and shoulders left shoulder, and then an inverted on the right. And you've got a rising wedge structure as your primary structure here. The possibility for similarity of form, because it's the same market participants that want the same thing to happen, that are behaving in the same way, like the entire shoal of sardines. When the shark comes, they make this perfect tunnel. No one person is making this tunnel of safety around the shark that is swimming through the shoal of sardines, but each individual, through its panic, fear, and typical Pavlovian responses, is keeping what it considers a respectable distance, and as a result you get these beautiful patterns and tunnels. And that's what you are. You are a rising wedge maker, not because you intend to make a rising wedge any more than a sardine intends to make a tunnel. How do you feel about being compared to a sardine right now? You've got to hit the like button. That's some proper disrespect. You got to go, bah, Jesus, this guy can diss someone and still be likable. Yes, I know. I'm also one of the sardines. But anyway, back to the story. So you're getting another rising wedge by form of function and people's reaction. They're feeling this implicit bullishness. They're dragging up those limit orders under these wicks to try get it. What tends to happen is that instead of building bid stack depth, they're chasing in. And then they're chasing in higher and higher. And then they eventually get filled. And then a lot of what should have been bid stack depth is gone. And you get that air pocket of whoosh. Ooh, where did the floor go? Whoop, come back up. You just, your guts just fell through your backside for a second there. We all know what it feels like in the 747. Even if you're sitting right there by the lavatory at the back in the cheap seats. It's most uncomfortable. Anyway, so you get the same thing in bid and ask stacks, particularly when you get this order clustering. So order clustering is going to be, as I've described, high volume of orders on the round number and very little in the lead up to it until you get down to the next round number. So that's what we refer to. And this is HVF method explaining bid and ask stack ladder behavior to you. So you could squeeze a little bit up, but you could also have that dip back down, and you could come back to make this. And then you could have a third and final, and you might run the 26.5, and then you could find you have a moderate size pullback, which could give us actually a very good thing, even though you won't enjoy it, because it would represent your right shoulder to your left shoulder, and it would be a similar structured one, a rising wedge, which is very telltale, lends further credibility to the pattern, and gives you an amazing potential target that'll take you to back having fours. And everybody would love that. And that's when you can actually put a fairly lightly leveraged trade on long. And if you get in at the right entry points, you can largely leave it on. And most days you're getting cash coughed up in your face, and a couple of take back days, and then on until you take profits at 40 and expect a larger rest, which I'm sure might happen. And then you get further structure. So markets need patterns to get back up. And patterns aren't straight lines up. Now that 40K would bring you to the foot of this big flag area zone, and it makes perfect sense to me. Does it make sense to you? He says, showing all hands like little puppy dogs on the car windows. We love that. Hit the puppy lick button, by the way. So that is Bitcoin, and that is what we potentially see. So overall it's generally bullish, but right now it's a tiny bit tricky. You might get in, and you may even get a little bit of joy to that upside and that squeeze higher, only to be washed further lower a little later. Only to be washed a little lower a little later. And you could get a third impulse up, which will take out the previous high as well, and we could get more footsie with the 25K and possibly down. Or this could be the last one, we come right the way down. I would imagine an entry could be possible. This is not a guarantee, but an entry could be possible on a pullback somewhere in this range during this period. And that would be a nice little left dip. Somewhere in the middle there, somewhere there would be absolutely pucker on the buyback. And the key point is you're not on risk and having carry cost, and your charge for your leverage, etc., is not applying, and you can wait for it to come back here. The alternative is if we are to be in a wedge, you get this wedge to pop, or it grinds along, has a dip back. You could get a type 3 melt up. Now, if dollar went back to being very weak, and we got less FUD and the market is properly oversold, you could get a crypto surge. So you could come back, could squeeze a little higher on the wedge, and then you could just pop out the top, type 3. Now that is the least common option, but in heavily oversold markets that are early fresh bulls, you could get some very supportive information that could do that. And then you could run, say, the 30, and before you know it, you could even start to see that 40,000 coming, and it could come in short succession. So if you're not in it, this is why you should hold Bitcoin, but not necessarily be in the leverage positions. Get your right shoulder revisit down in scenario 1, running into there, and get a right shoulder dip after kissing the 25K. Remember, you need to kiss the 25K. We call these armpits, armpit 1. You need to finish the head. This is all a complex head. You need to finish the head there with that armpit 2. You've made the touch, but you need a pullback at some point to get a proper right shoulder. If you were to get that right shoulder, then you could add your leverage positions here, or as you turn on smaller fractal time frames, and that's something we would be watching as a community together. By the way, why not have that chat, free chat, with a trader, investor, experienced consultant of ours who is in the game, is an actual trader, not a salesperson, is an actual investor in the crypto markets. Talk about your interest in crypto and what you've been doing, and it costs absolutely nothing. And all you have to do, go to that first link below in the notes and click. That's it. That's all you have to do. Super easy. Anyway, so you could have that discussion. But if that were to come, I would load up the leverage here. If we go melt up, I wouldn't. And the minute you chase, you could run into trouble. But if you chase leverage there and you get it there, and then the pullback comes, you're straight away nervous, fidgety, and you'll get washed out, and you'll jump out probably at the low. Leverage is something to be used very lightly, very judiciously, and extremely well timed. Let me say those 3 points again, because this is kind of important. You've got to be super confident about the macro time frame and what is going to be going. You can't be super confident, because that points to you haven't even seen a scenario where you could be wrong. You can only see winning. That is blinkers. Don't do that. But you have a high degree of confidence whilst clearly having visualized potential scenarios where you could be wrong, but on balance of probabilities, you assess the macros in your favor. You're catching a key turning point across lower time frames inside of your bigger macro time frame. So you're stacking bullishness, green lights like Formula One, with all the green lights on all the time frames all the way down, that you're getting a key moment where you can have a reasonably tight stop for a limited calculated loss. If you aren't doing this, you don't understand money management, you will be a loser. This is important. It truly is. So if you can do that, then you can add moderate to light leverage and actually have a benefit of having a slightly bigger position than you actually hodl in your investment scenario. And that would be great. Okay, so that is Bitcoin and what I see is happening. It's interesting. I'll wildcard the Bitcoin dominance in all of this. So the Bitcoin dominance is working its way up. We told you we had a target for 45 over there out of this double bottom. Again, there's your neckline. And there you had a little dip down and you're going. So we are awaiting a target there. But again, tiny bit stronger. Maybe you ease a little bit down. Little bit of wick sell. You saw the grind line there. We didn't like that in the community, and you went super low vol. That invariably leads to a spiller. After that spiller, you had the rally, and again, just getting a little bit stuck in previous legacy levels. We have a funnel here. You might be able to see that. That was a downside in dominance that saw Bitcoin lose ground in terms of its dominance all the way back down to the key level that we've already given you before on 40. So you're going to, on balance of probabilities, run this box zone, which is the funnel of the legacy setup, because you put your foot through it there, but you have to revisit, wind up, so that you can smash it with momentum. So this is what happens to zones of key significance. You bump into them, you step over them, but you can't hold. It's a real muddy territory. It's a toughly defended area. You pull back, you wind up, and then you go. So you bump in three times normally. So that's the second time. A little bit of a drift down, come one more time again, drift, and then we go. And we go something like this. And that could see a bit of honey badger action for Bitcoin, by the way. And that could indeed see you project through the 45 levels, maybe take you into the 46s to 46.5, which would be peak, a really nice run for Bitcoin, making it the honey badger again. So that's what dominance may potentially do. Whilst it's creeping up now, I'm not sure how sustainable it is that it just goes straight up from there. It's not typical like that, especially through a key level as we've identified here. It's going to be a muddy field for it. Okay, hope you've enjoyed this video. I'm glad to have chatted with you and given you this update. As I said, why not have a chat with an experienced trader investor friend, absolutely free. All you have to do, first link in the notes below. Thanks for visiting. We catch you next time. If you enjoyed the little puppy chat, go hit the puppy licks button right there. Lickety lick, lick, lick. Okay, till next time. Bye.